I'd like to introduce you to a revolution unlike any other throughout the history of mankind. This is a wealth revolution, and it's going global. Did you ever think that you'd be able to benefit from the only real, time-honored investment mankind has ever known? Real estate. Real estate investing has only ever been accessible to a small percentage of the world's population. This is no longer the case. The wealth revolution means that wherever you are on your wealth journey, be it taking your first steps or taking off globally, you can join our global community. A community of real estate investors just like you. The Global Wealth Group is experiencing exponential growth, and wealth has never been this accessible. A truly global wealth revolution. We dream big, and our dream is to impact the lives of 1 billion people. 1 billion people. How will we do this? Through groundbreaking digital platforms that allow investors like you to take part in exciting real estate investment opportunities. These opportunities are waiting for you everywhere, anywhere, worldwide. Now you can invest in real estate with any amount of money, from the comfort of your couch or your internet device. Introducing our global brand ecosystem. Wealth Create, Wealth Migrate, Wealth University, the Wealth Movement, and the Wealth eCoin, which...
So, hello to all of you, and wonderful to have you online. And we started with a video there just so that you can understand the full scope of the Global Wealth Group. That video is got another 4 minutes to it or so, and certainly something that we can share in our Seedrs race. We've got a very, very exciting night tonight, and we are literally starting a 4-part webinar series, which we're calling Scaling 5.0. But before I go any further, Lee, as our head of community, would you mind getting us started?
Absolutely. Thank you, Scott. So good morning, good afternoon, good evening, wherever you are joining us from today. It is great to have you online with us. We are very excited to be with you and spending the next hour or so discussing the Global Wealth Group and how Scaling 5.0 really puts us in a position to win together with you. So joining me tonight is Scott Picken, our founder and CEO, who will be taking you through our presentation, and also Alex Westozen, who has been with the team for a long time and forms part of my team of critically looking after our investors, our shareholders, and our community. So welcome, gentlemen. We appreciate you coming. Now, as is Global Wealth Group tradition, we like our attendees to be very interactive with us, and we like to start off by you popping in, saying hi into the chat box and letting us know where you are joining from. You will also notice that the Q&A box has been activated for this webinar, so we encourage you throughout the presentation to ask any questions that you might have so that we can actually get all your questions answered. We have Scott and Alex in the hot seat and myself as well, so please do post those questions as we go along. With that, I invite Alex to introduce himself.
Thanks, Lee. I see a lot of friendly names coming through here. So hello to everyone that I've already spent some time with and met. For those who do not know me, my name is Alex Westozen. I've been part of the company now for about 2 years, and I wear the hat of the liaison officer for our shareholders and our strategic partners. And I'm currently on a countrywide tour, and I find myself here in Durban to re-engage with our shareholders in person and any potential new shareholders. So for any of our shareholders that'd like to connect and have an in-person conversation, I'll share my details in the comment box below. Then you guys are welcome to connect, and yeah, let's see where that takes us. And excited for this webinar this evening.
Thanks very much for that introduction, Alex, and thank you for joining us. I also wanted to speak to you about one of our missions is to provide education and help solve the wealth gap. This starts with education as we move into various other items, and we have partnered with B1G1, which is buy one, give one. It is also part of our campaign here, and what that means that any webinar that you attend, we donate a day's education to someone in need across the globe through the B1G1 initiative, and also through the engagement on our webinars. So every time you post a question, a comment, a query, please can I ask you to post W if you want to donate water to someone for a day, a T behind the comments if you want to plant a tree, and E if you want to provide a day's education. We will then put this through to B1G1, and we will do those investments on your behalf and also provide you with feedback and your certificate of your investments. I will pop those into the chat box, so please, just anything going forward, the only way we can do that is tracking it with either the T, the W, or the E. So we look forward to your participation in that and providing education, water, and trees, which are much needed resources for everybody. Scott, over to you.
Right. So just to clarify what you just said, there's an amazing gentleman and an incredible company out of Singapore. They have done about $250 million through their platform, and they basically facilitate what we're doing. And so to repeat what Lee just said, I can do a presentation, anyone can do a PowerPoint, but what's awesome is when we have engagement. So if you put in a T, then we will plant a tree. If you put in an E, we will pay for a day's education for a child in an emerging market. And if you put in a W, we will pay for a day's fresh water for a family in an emerging market. So with that, and with the purposeful intent, let's get started. I want to share with you Scaling 5.0 and what is it all about. So let's look at the concept of scaling just to start off with. On the left-hand side, you've got the company value, and on the bottom, you've got time. So the way that it works, and they call this the traditional S curve, it works in this format. But there's a couple of stages. You've got the startup phase, and this generally takes about 3 years for a company. Then you've got the scaling phase, and then you've got the mature and the listed phase. Now, each one of them has a number of components which you need to take into account. The first is that the startup phase tends to be funded by the founder and by seed investors, often angel investors. Then the scaling phase, you get venture investors. The mature phase, you get large funds or private equity. And the listed phase, you get corporate money. What's quite important is that this scaling phase is typically post-revenue, but pre-profit. And this is typically profitable, predictable, lower growth, and dividends. And remember later when I show you the different stages, and also for you as an investor, the benefit of whether you invest at this stage, whether you invest at this stage, whether you invest at this stage, or you invest at this stage. There are 4 stages, and there's a number of benefits and risks depending on which stage you invest at. Where are we? We're at this stage. We're in the stage now of scaling globally, and I'm going to explain that more. Where are we going? Well, the bottom line is that's where we're going. We're in the scaling phase. And to do this, we need capitalization. We need scaling skill sets. So specifically team members that have scaled businesses before. We need discipline and frameworks. And we need investor activism and evangelism. And often when you go through this process, it leads to some of the leadership changes, a reorganization and focus within business units. In a business, you often want to, they call it the 3 T's: terminate, train, or transfer. But in the scaling phase, you don't have time for the training. It's terminate or transfer. And then finally, the investor activism and evangelism is absolutely critical to the success. And that's why we're holding tonight. And that's why it's about the 3 exclamation marks, how we can unlock this opportunity together. So let's get started. In late 2018, early 2019, we did our first raise on Seedrs. We did it with our B2C platform, Migrate, and it's now achieved full proof of concept. We raised $2.5 million, or roughly just short of £2 million from 658 investors. And when people say to us, why do we use Seedrs? Well, the bottom line is we've got 658 investors from 42 countries. And it gave us huge distribution, huge reach. A great example of that was one of the investors that came in was a gentleman called Rohan Malhotra. He's a very well-known business family in India. And since his investment, he's helped us roll out in India, which again, I'm going to talk to you about tonight. So it's not only about the capital, it's about the smart capital, and it's about the distribution. Since we did the Seedrs raise, Migrate and we used our B2C brand, Wealth Migrate, which is a global real estate marketplace. We've now achieved product market fit. Let me explain to you what we used the capital for. We raised $2.5 million. We invested in building out the tech, in our due diligence, in our supply, in our digital wallets. We integrated with Lemonway, the biggest digital wallet provider in Europe with 6 million wallets. And we also created global compliance. We dropped our minimums from $1,000 to $100. And we grew our distribution through partners, 83 affiliates, 13 channel partners, 7 strategic partners, and 2 country partners. We also grew the platform metrics. We've now got members in 171 countries. We've got investors in 69 countries. We facilitated over $1.18 billion. It's actually over 1.2 now. And we've had over $105 million physically go through the platform. Why are we having this webinar tonight? We now want to scale. Proof of concept has been achieved. And now it is about scaling. So let's look at our purpose. Our mission is to make quality alternative assets accessible to anyone, anywhere, from any amount. Let's look at 2 real-life examples and the challenges that investors face. Let's take Ishanand. He lives in India, and he wants to invest in property in the UK, or real estate, depending on what word you want to use. He's got 2 ways of doing it. If he wants to go through the financial institutions, it's what we call the secondary market. He basically goes to a financial advisor who goes to a financial institution, who then invests through an investment vehicle like a property fund or a REIT, a real estate investment trust, and they invest in the property. Each layer in the value chain has multiple fees and reduces transparency. The exposure to the underlying asset is diluted. And this secondary market, the stock market in simple terms, is subject to price volatility and market sentiment. And what's really interesting is that it has a higher than 70, even though it's an alternative asset like real estate or property, it has a higher than 70% correlation with the stock market. And thus the negative impacts of diversification are not achieved. And so, and by the way, I'm being kind on the slide with only a couple of middlemen. As you know, there are many, many middlemen between Ish in India and his investment. His other way of doing it is to invest directly and to go and buy a property in London, a house, apartment, or somewhere in the UK. But to buy that, there are actually 16 different middlemen, estate agents, attorneys, valuers between him and his investment. The minimum investment is very inaccessible for many. It's a very high threshold just for the deposit. There's very limited diversification. And the problem is that the risk is all concentrated in generally one property with one tenant. You've got all the hassles of international banking, structuring, and tax. There's long investment cycles. You know, the ownership of property should be 3, 5, sometimes 10, 15 years. And the one that probably puts most people off, that there's massive hassles in trying to manage a property from afar. And because of these challenges and these problems, only 13% of the people in the world actually have access to global residential real estate. And less than 1% of people have access to commercial real estate and other alternative investments. And as we said, there's only really 2 solutions. You've got the direct investment or the secondary market, and both are fraught with challenges. So why is this a problem? Well, it's even a bigger problem when you actually look at the returns, because the primary market investments, the alternative assets, things like private equity or real estate or property, have better returns with lower risk. When you look at this research that was done by the SEC, the regulator in America, from over literally from 1996 to 2016, private equity outperformed the S&P 500, and it got better returns. You can see it here in blue, and yet its risk was lower. And what's also interesting is that last year, right through the heart of COVID, our platform delivered a 14% return. So not only do people not have access to these opportunities, but they also have better returns with lower risk. What is the solution? Well, in simple terms, we put you and I directly into the property. You have, through our platform, you have the ability to invest directly. You get access to primary market direct investment in alternative assets like property or private equity from $100. There's no unnecessary intermediaries. There's complete transparency. It's simple, quick, easy, and it's done via our platform and our digital wallets. And I highly recommend, if you're interested later, to ask the question, and I'll give you I'll do it live for you. I'll actually show you how it works. Our global investments are vetted and handpicked by a team of experts, and our investments are expertly managed. So it's hassle-free. So you don't have to worry about banking, structuring, compliance, management, maintenance, broken toilets. All you focus on is simply and safely being able to invest and diversify with quality partners in quality opportunities across different countries, different currencies, different assets, and different partners. True diversification. And you can use technology to do it safely and simply. For this reason, we've won numerous awards, including top FinTech awards in China, top FinTech awards in Africa, included in the KPMG top FinTech 100, etc., etc., etc. When you look at our transaction process or our traction, our North Star metric is transactions. 3 years ago, we did about 250. Then we did around just over 500. Then last year, we did north of 800. We've been doubling every year. And this year, we're planning on doubling again. You can see the number of active investors. You can see the amount invested on the platform over the last couple of years. You can see the average IRR, and you can see the number of countries that are represented. All our metrics are trending in the right direction. If you want to understand the unit economics, we've got the customer acquisition cost. We've got the new investor. We've got the transaction investor, the number of transactions per year, the average transaction value, the reinvestment rate, and the customer lifetime value. What's really important is that if you look at our customer acquisition cost, now this is not a lead or a member, this is actually an investor who invests on our platform. The acquisition cost is $251, but the customer lifetime value is $4,800. And the reason is the stickiness of the wallet. The average person stays in a bank account for 14 years. So when someone gets their money back into a wallet, they reinvest it. And because of that, we're making a 19x return on our customer acquisition cost, our CAC. And our goal, as you can see, is to drop and increase depending on where you're looking at. And as we've dropped the minimums to $100, we've already seen a significant increase in the metric, transactions, and the direction that we want to go. If we look at our group structure, it's quite simple. We've broken it up in terms of our B2C team, which is Wealth Migrate, and our B2B team, which is WealthPoint. And I'm happy to share this with you, but our B2C team is a global real estate marketplace, and it's actually now got other alternative assets on it. And our B2B platform, WealthPoint, is our technology investment platform, which offers the digital wallets, and it works with partners. So what does it look like from a revenue model? Well, we've got our own distribution in Wealth Migrate, and there we charge 1% to 3% transaction fee. There's a transaction fee up front. There's a transaction fee in the middle when people earn transactions or earn income or revenue, and there's a success fee on the end. It's exactly the same model as Airbnb or Uber or any other transaction marketplace where we only make money when you make money. And then on our B2B side, we white label those platforms, and basically it all uses the same technology, which is an investment platform as a service. And that's where we aggregate the technology, the regulation, the digital wallets, the curated supply. Everything is aggregated into one place and then has global distribution. We've currently got 14 different platforms that are live using our B2B solution, including our own internal solution. But what we're extremely excited about is we've also got country partners. We started in China in 2016. We certainly learned some very hard lessons in China, but that relationship has grown from strength to strength with our Mandarin-based platform in China. We're currently in the process of launching Wealth India. India is probably the most exciting market in the world at the moment because China's had challenges with the Indian-American conflicts, COVID, etc. And India is where 5 of the last 10 unicorns have come out of, and the majority of venture capital around the world is starting to move towards India. It's super, super exciting. And our partner on the ground there, Ishanand, is incredible. And we're literally in the process of launching Wealth India as we speak. We also are weeks away from launching Sharia Wealth. And our partner here has raised $12 billion in Sharia compliant investment products. They have all the right regulation to be able to do this. And so in partnership, we're launching Wealth India is a geography-based strategic partner, and Sharia Wealth is a genre-based strategic partner. But it's all about partnering with companies that already have solid brands and that have solid distribution. When you look at the competitive landscape, there are a lot of platforms out there. In fact, there's about 250 that we're aware of that are local platforms helping local investors invest in local deals. So that might be an Englishman or an English lady in England investing in an English deal. It might be an American lady in America investing in an American deal. So we believe this market is overcrowded. But where the opportunity lies, where the blue ocean lies, is in global diversification. It's in a focus on technology and digital wallets. Again, when you've got a local platform, they tend to just integrate with your local bank accounts. But if you're investing internationally and you want to have a globally diversified portfolio, you cannot invest in bank accounts. It just doesn't work. You have to have digital wallets. You also have to have a global focus and global compliance. And therefore, there's an abundance of local low-tech platforms. But our unique platform is in a blue ocean. It's got digital wallets, it's got opportunities across the globe, and it allows people to truly diversify. And one of the things that excites us is helping people in emerging markets invest in first world markets. In terms of our defensibility, we've already got the integration with Lemonway. I've mentioned to you, they're the biggest digital wallet provider in Europe. They've got 6 million wallets and they've got European compliance. Through our mechanism of collaborative smart investing, we figured out a way to compliantly allow people to invest already from 71 countries around the world. We've got an authorized Cat 1 financial license. We've got well-established international networks and experience in delivering high quality deal flow. Again, I've been helping people invest in international property for over 20 years now. In fact, since 99. So it's 22 years. And our team of partners is phenomenal. We've got a focus on community engagement. You've been invited to this webinar tonight. We've actually already got over 1,000 shareholders in this company. And we built the entire company based on education. Education is critical because education builds trust, and through trust, you then can allow people to be investors. And then lastly, we've got a very sticky product. Just like a bank account, people, when they engage and they've set up their KYC and they got their digital wallet, they want to invest, they want to reinvest, and ultimately the dividends. So you get a customer in and you add value to them and they reinvest. And again, according to the statistics and the research, you're looking at least 14 years. What about the market? In the last 12 months, $1.1 trillion has come into the global alternative assets. As there's been a lot of volatility in the stock markets and concerns around COVID, there's been more and more capital flowing to global alternative assets or primary markets, things like real estate, private equity, etc. Now, what's interesting is that if you take real estate alone, 25% of all commercial real estate in America in 2021 was raised online. Now, to put that in perspective, that was $17 billion. And while the amount of money that went into American real estate actually declined from 59 billion to about 51 billion, the amount online that was raised more than doubled. So it not only more than doubled, but it significantly increased its market share. And it's a good sign of what is expected to happen around the rest of the world. If you take some correlation on some of those stats, and you took just 5% of that, that would yield $55 billion in alternative assets. And if you literally took a 3% transaction fee, that would be a total addressable market of 1.65 billion. And you can see here that we've done this fact check already. When we say 55 billion and people think it's a huge amount of global, transactions, just $17 billion was done just in real estate in America last year. Our target market is the emerging markets. It's Africa, China, Indonesia, India. It's where you've got the emerging middle class. large population, growing middle class, and high net worth investors that want wealth protection, a plan B, and peace of mind. We look for GDP growth, urbanization, increasing online adoption. And these markets are less competitive and provide a significant opportunity. It's why we already are in Africa, in India, in China, in other Southeast Asian markets. And as we said already, investors from 71 countries and members from 171 countries. Just by the way, these emerging investors, there's currently about 1 billion people in the middle class around the world. That's expected to grow to 1.8 billion over the next 10 years. And on top of that, 3 billion people are going to be joining the global economy through their smartphones. So you're looking at increasing anywhere from 800 million people in the middle class to anywhere close to 3 to 3.8 billion people. This is going to be one of the most significant economic trends over the next 10 years. And every single one of them will want access to the wealth that the top 1%, the same opportunities that the top 1% invest in. Who's our team? Well, you've got myself. I lived in London for 9 years. I built the business from London. I wrote my dissertation in 1998 on how technology was going to change the construction and property industry. And I did my master's at Greenwich University on the same topic in 2001. I basically spent the last 20 years trying to marry together technology and property, and have built a number of successful businesses to enable that. Our chairman, Willem van der Post, he was the youngest partner at Deloitte. He actually ran their exponential technology division. In 2017, he went on his own, and since then has been running his own venture capital firm, focusing on exponential technology companies. Tim Hilton, if you know the company Bob the Builder, about 15 years ago was the CFO of that company. It actually listed in the UK. He's based in the UK. And since then, after that listing, he started his own company called Avon Glen. And he's been helping us at a CFO level because they help high growth technology companies. And as many people say, what he says to venture capitalists that have been funded like ourselves, he provides a steady hand on the tiller. Gavin Rousseau, who's been head of our technology, he used to work in IPRIO. IPRIO do $13 trillion a year in money movement, transactions, marketplaces, and actually underwrite all the IPOs in not only America, around the world. So has a complete understanding of how to scale. Lyndon Booth is our product management officer. He's the interface between the technology and the commercial. Rian van der Pfeiffer has over 20 years worth of experience in due diligence and regulatory environments, and he is our chief investment officer. We've then got a different array of expertise in digital marketing, in online sales and marketing, and you've already met Lee tonight, who is our head of community. As a community-based company, it's all about focusing on our community and adding value to our community. So we've got a diversification across experience, across different skill sets, and even across different geographies. What's our growth strategy? Well, we've built a powerful product. We've achieved product market fit, and now we're looking to scale. We're looking to improve our profitability and continue to support and improve the core elements of our business, the technology. There's 3 areas that the capital is going to be used for. The first is distribution. We want to grow our own distribution brands. And second, in our B2B space, we want to continue to source new strategic distribution partners. As an example, I can't talk about them yet, but we are in the final stages of signing one of the largest property portal players in India that has 22 million clients. That's the type of strategic partner that we want to be dealing with. In terms of profitability, we want to increase our conversion of members to investors. We want to increase the number of transactions per investor per year, and we want to reduce the costs per transaction. It's all about scalable operating profit. And then with our technology, we want to consistently improve and enhance the technology and the infrastructure. We want to automate the KYC process so that we can increase for the large number of new investors, particularly next year as we go into the wealth create space where we drop the minimums even further. Then one wants to, and a number of investors have asked us on the Seedrs platform about our 3-phase strategy. we've broken our 3-phase strategy into 3 5-year strategies. Phase 1 was 2015 to 2020. It was all about high net worth investors. It was about investing from $100,000. We got it down to $1,000. And through this time, we learned what was needed to build a platform at scale, both in tech, banking, and compliance, and really creating and formulating and finalizing the 6-step investment framework. And again, if it's a question later, I'd love to share that. Phase 2, 2021 to 2025, is all about venture building. It's about scalable operating profit. It's about a dual strategy of growing our operational platforms through organic growth and through venture building. So we grow our own platforms organically, and then we look to 10x our metrics, our numbers, and our performance through strategic partnerships. And then from 2026 to 2030, we go to the global wealth meta marketplace. Then it's a combination of local and global investors investing at all levels, all transactions going through the global wealth meta marketplace, each of the levels of the 6-step investment framework being taken into account, smart investing being put in every single person's pocket, and ultimately us fulfilling on our purpose to help solve the wealth gap. I want to share with you the meta marketplace. So you can see here that you've got local marketplaces and you've got global marketplaces. You've got real estate and you've got diversification, other alternative assets. You've got genres and you've got community. So at the heart of it, everything is built on our technology. It's our platform, it's our regulation, it's our compliance, it's our digital wallets, and it's our curated supply. We first launched Wealth Migrate. And as I've said to you, this was our B2C real estate marketplace, and we've got a product market fit there. We then launched the Wealth University, our learning platform. We launched Wealth Movement, which is our overall global movement to create a better and more sustainable planet for all. We then launched Wealth China. We did a private equity for Genius U, where they did 3 raises and are now currently wanting to list on the New York Stock Exchange. They're in the process for somewhere in the region of $200 to $250 million. We launched a private platform in the UK for a property developer called Zuza. And that was really in the property area and with Cashbox on the structured notes, when we realized not just in property, but in other alternative assets, that we could also provide a B2B solution, not only a B2C solution, but also a B2B solution. We then launched our upmarket brand, Private Wealth Global, call it the private banking solution, which is the face-to-face opportunity. We've got smaller genre partners like Yachties and Wealth, that people, you know, that focus all the people that live and work on the yachts. We're launching Wealth India at the moment, as we spoke, and we're in the process of launching Sharia Wealth. And that's where we sit at the moment. We don't try and do all this at the same time. People say that, are you distracted and defocused? No, we use the core technology and we build through partnership. Every single one of these teams is an independent team with an independent focus and an independent goal. With time, we will launch Wealth SA. We will launch Women in Wealth. And by the way, if anyone knows an incredible team of women with a great brand and good distribution, we want to talk to them. We'll launch local opportunities across the globe. We'll launch other genres like Millennials and Wealth. And hopefully we'll launch soon Wealth Create, where it will all be about gamification and literally getting the investment down to $1 and it all going through a cell phone with smart investing. So the use of the funds and the opportunity, well, we're raising a safe note, and I'll explain to you what a safe note is. It's an instrument that came out of the US. It's for high growth companies, and it takes the valuation off the table. It allows investors to participate while we are going through the process of growing our company, of scaling, before we go to the priced equity round. We're looking to raise $3 million. And you know, if you do it off platform, the minimum investment is $10,000. If you do it on the platform, on the Seedrs platform, it's actually £10. And the discount ranges from 15 to 30%. And as you can see here, I spoke about the initiatives. The capital is being used, the use of funds is being used in 3 different areas. The Profitability Initiative is 21%, the Technology Initiative is 29%, and the distribution is 50%. So in conclusion, as I said to you, there's the 4 phases of a business. You've got the startup, you've got the growth scaling stage, you've got kind of the private equity stage, and then you've got the institutional stage. Sorry, I'm just aligning it with that previous slide. When they IPO, like the Facebook or Amazon, a lot of the value has been taken off the table. In this private equity stage, like an Uber or an Airbnb, the majority of us don't get access. In this startup phase, there's a lot of risk. You never heard of them. They don't have track record. They don't have a brand. But we're in this high growth scaling stage. And we believe with technology and our community-based approach, we're now allowing investors to go up the value chain and to participate earlier, not only in a product that's solving a problem for you, where you can actually invest on the platform, but actually in helping solve and provide a solution to a global problem where investors want to participate. The 99% want to be able to invest like the top 1%. What are the discounts? Well, if you invest through Seedrs, by the way, because Seedrs bundle all the money together, you're getting the top level, the 30% and the Class A voting. If you go off platform, there are lower thresholds of 50, 25, and 10, and you can chat to Alex or Lee if you need to go off platform. Otherwise, you can literally go on the Seedrs platform and invest from £10. The good news is we had £720,000, over 75% of the capital from our follow-on investors. It's always a very strong sign. We've had an investment and a commitment from Jonathan Wasserstrom's Angel List Syndicate, which is over 4,000 prop tech investors in the US. This is not only important for their commitment, but much more important for their reach. And this is what you call smart capital. We're working with Simple Capital, who is a professional venture capital organization, to be the lead investor in our priced equity round. And then the question some of us ask is, why are you raising a safe note? Why not just direct equity? And the answer is it's a bridge round to a bigger raise. We're scaling out our partnerships at the moment, and we are in the process of getting our strategic partnerships, like our FCA license in the UK, that's about 8 to 11 weeks away. And so we want all of that in place before we go to the priced equity round. And then in conclusion, the perks. And this is something that we feel very strongly about. Lee started with the purposeful intent of our company, but anyone who invests, even if you invest £10 from Seedrs, and you can go read them here, the dip the toe, the wealth hacker, the wealth accumulator, the investor, the inner circle, the strategic partner, and you can see the investment thresholds. But even from £10, you'll get access to our investor test. It's a personalized path to wealth. We've got the wealth hacker, which is our monthly and annual kind of community. And it's effectively a way for people to be part of a club and learn and grow with like-minded individuals. We've then got investor fees. So depending on the thresholds, you'll get discounts for the rest of your life on your investor fees. And then we've even got, in the higher thresholds, the ability to participate in the investment committee and have an active role to play in the business. So there's many different things that will get value to you depending on the thresholds you invest. But also, what about giving back to the world? If you invest, you can gift to others an investor test. And depending on how much money you invest, will be a certain number of investor tests. You can even invest and share the wealth hacker, so the subscription model, and give them free subscription. You can give them access to the starter pack, which ultimately allows them to invest, and they get a $100 voucher and they get the wealth hacker put together. There's no better gift that you could give to a human being. And so why not go to Seedrs? This is the screenshot I took today. We literally went live yesterday. We've got 98% of the funding from 132 investors already, which is extremely, extremely exciting. And if you're interested, and I'll go there just very quickly, you can actually see here that you can go in, you can read all about it. I'm not going to tell people how to use Seedrs, but you can go watch our video. You can read, everything about it. And in conclusion, if you want to get in touch, you can reach out to Alex. You've met Alex already tonight. You can scan this QR code if you're tech savvy, or you can email Alex, and I'm sure Alex will put his number in the chat group as well if you want to just WhatsApp him. Or you can reach out to Luke Bolton, who's, as I said to you, a venture capitalist from Simple Capital. They are working with us from a professional fundraising perspective, not only now in helping us do the safe note correctly, but also in setting and ultimately aiming to be the lead investor into the priced equity round. And Lee, that is all from me in terms of where we're at. I'm sure there's lots of questions, and I apologize if it's a hell of a lot of information. I often get blamed for people thinking that they're drinking from a water fountain or a fire hose. but this is something that we are deeply passionate about. It's something we worked on for 20 years. We've built a significant infrastructure and platform, and now we want to scale. And I leave people with one last thought if they're going to drop off before we go to the Q&A. There's 3 reasons why people become a shareholder in our company. The first is that they want to make a profit. The second is they want to join a like-minded global community where they can all not only create the world they want to see, but they can grow and become global citizens together. We've already got 1,000 investors from, certainly, I know the last count was 42 countries, but certainly well more than 40 countries. And the third is that they want to have a purposeful impact on the planet. They want to solve one of the greatest challenges on the planet, the wealth gap. And so if it resonates with people, and I tend to say to people, it's not only about the profit, it's not only about the purpose, it's not only about the community. It's all 3 things that we're adding value to people. And if that resonates with you, then I welcome you to join our journey, to join our community, and come on this journey with us. That's from me, Lee.
Thanks so much, Scott, for your time. I really do appreciate you, as always, bringing it. And to the attendees, thank you for joining us. We are going to flip into Q&A, but just before that, Scott, you did mention that you would run through the platform and show people how to invest live. So I wonder, before we hit into Q&A, if you will do that for us.
Let me just do that. I was dealing with a big investor today, and I don't think there's anything more powerful than this. Before I do, there's 3 things that I just wanted to share with you. 3 steps. I'm going to end this presentation and just open another presentation quickly. And the reason being is that these 3 steps I can't show you because I'm already an investor. So if we go to these 3 steps, the first one is that you sign up. So what does that mean? Well, you literally go online, and it's pretty typical. You sign up, you put in your email and your password, etc., and you get started. The second is that you select your country and your residence and your investing. Now, we've built IP detection, and this is the true scalable part of our platform, is that every country generally has a different regulatory path for investors. And depending on the country, we can build the regulatory path. So if India is $1,000 and Hong Kong is $10,000, then we can build, as a minimum investment, we can build that regulatory path. Also, one of the reasons that we have our head office out of the UK, we have a holding company out of the UK, is that the UK regulation is self-certification. And it was really interesting because I was talking to the lawyers years ago, and they were like, you can't help retail investors. And I said, okay, well, that's interesting, because how do Crowdcube do it? How does Seedrs do it? How do Property Partner do it? Where their minimum investment's £10 and they got advertising all over the tube. And they said, well, it's self-certification. And legally, we as a platform, we don't have to verify that. The investor verifies that, which allows, in a much more compliant way for investors to invest. So then you verify your account and complete your profile. You go in and, you fill in your country of residence, your personal information, your physical address, your banking details, you upload docs, etc. I think it's probably fairly self-explanatory in terms of the whole process. You then upload your KYC documents and submit. Now, anyone that's involved in any financial transaction, even if you're a tenant renting a house, will know the frustration of doing KYC, know your client. We do it all online. There is still human interaction, and this takes about a day interacting between our team and the Lemonway compliance team. And that's what we were talking about earlier as one of our use of funds, is to digitally integrate this entire process. Then you send your funds to the wallet. I think this is probably one of the most exciting things. I've been investing overseas for 20 years. And as I've said already, it's incredibly difficult to open offshore structures and bank accounts, etc. And yet now you've got a digital wallet. You can deposit your funds, you can withdraw your money, and you're in complete control of your money. No human interaction, no fees, no PDF or forms. There's no fees on the way in. There's no fees on the way out. There's no fees for holding your money there. And so it truly is your own digital wallet that you can not only, you can not only have the peace of mind to manage, but you can equally go and diversify and invest around the world. And then if you go to the live platform, because all three of those steps I've obviously already set up, is step 4, which is the investing part. And if I just log in here quickly, I'm going to do this very quickly. If people want a longer demo, I can do that. But I think what's important here, firstly, is you can view your profile. So whether you want it in your own name or in an offshore structure, you can do that, just like a sort of a banking account. You can look at all the deals. You can look at the US deals. One of the reasons we went with Lemonway is you can have a pound wallet, you can have a euro wallet, you can have an Australian dollar wallet. You can also see the different asset classes between real estate and alternative assets. If I go to my portfolio, I'm obviously looking at it in my personal name. You can see the money I've got. You can see my pending investments. You can see my funded investment. If I was to change that to my offshore structure, which I tend to invest bigger amounts in, you can then see my wallet amount and you know, the different things. If I go to my wallets, I can basically go into my wallet. I've got complete transparency around my money, and I can go in and I can see what are the distributions, what have I been paid, and it all says to me, there's complete transparency around my returns, my equity, my success fees, etc., etc. And I can download the statement. Again, one of the use of funds is that this step 4, we want to build out where we can have much better reporting. We can look at budgets to actuals. We can compare American real estate to UK real estate as an example. And then we get to the exciting part, which is just back to the wallets. One part I forgot to mention there is that you can also, as I've said to you already, withdraw and deposit money. So I can, with no human interaction, literally go in and deposit money, or I can withdraw money. I'm in complete control of my money, and you can see it goes back to my Lloyd's account in the UK. Okay, let's go through to the marketplace. So now let's assume I want to invest. There's a deal here in Australia, a co-living project. There's a medical building in America, and something we've launched just this quarter is a quarterly in basket where people that want diversification and don't want to have the hassle of reading everything. Our chief investment officer has a category 2 license, which allows him to then do quarterly investments on behalf of investors. Let's just say I want to go to this medical building. I can literally click on it. Again, I'm going to go through this quickly, but you can see the minimum investment is $97. You can see when it's listing, when it's closing. You can see the internal rate of return. It's a 5-year investment. You can see the cash on cash. By the way, this is all net. So we don't sort of, catch people out with discounts on the front end, and then they find out that they get a lot less money in the bank account. This is exactly what you get net in your wallet after fees. You can see who the sponsor is. You can see who the due diligence partner is. You can see the type of deal. It's medical. You can see the sponsor, and and there's different categories between emerging and right through to tenured, and you can see the risk. You've got the risk categories. You can go read all about them if you don't know what they are. And this is really important because we believe the old way of doing property was, hide the risks and hide them on page 32 of the PPM. Like, we put them right out front. You can download all the documentation, and we tell you what the risks are here, and you can see the project milestones. You can then also go in, you can see all the photos, you can watch videos. This one doesn't have a video. Lee, take note, because I think we should be putting a video here. It's got the overview. I think one of the most powerful things is that if I go in and use the investment calculator, it all automatically adjusts. If I invest $1,000, you can see exactly what my returns are, what the fees are, completely transparency, what the net return is. And you can see that I'm going to make $1,622 over the 5 years. I can also go in and see if I didn't have fees, it'd be $1,692. So the platform is earning $70 over the life of this project for helping the investor right the way through. And again, we only make money after the investors made money. You can go read about the investment, the market summary, the sponsor, or the due diligence. But let's assume that I want to invest in this deal. I literally go into it. I say, right, I want to invest $100. I go continue. I digitally agree to all of this. Because I'm a good compliant investor, I will download my documentation, which has all been digitally signed. I go agree, and I go make the investment. And what you've just seen, what used to take months or years of flying to America, setting up a structure, opening a bank account, trying to find a partner on the ground, investing in a deal, I've now done in 30 seconds. And if I go to view portfolio, you can literally see that I've invested in the Hamilton Young, I've invested in the quarterly basket. But let's just say that I made a mistake and I don't want to invest in this anymore. I go cancel my investment, remove my investment, and it's done. I'm in complete control of my cash in the digital wallet. And so, Lee, I think that's enough. If I do this in a live presentation at this point, the people in the room generally jump up and down and scream and shout with excitement when they realize how easy it has now become to become a global investor and to be truly diversified.
Absolutely. Thanks very much, Scott, for sharing that with us. It is amazing to see how quickly people can invest and still stay in control of their money. So let's switch to the questions that have come through. Our first question that has come through is, what are the benefits of the Safe Note?
So there's some questions that have come through, Lee, that we prepared for because they were coming through quite regularly on the Seedrs platform as well. And I want to share my screen again quickly and take you back to the PowerPoint. I wasn't, I'd heard of Safe Notes, etc., but that's why we worked with Simple Capital, because they are experts in this space. And I want to just share with you the benefits quickly of a Safe Note for investors. So firstly, it's a legally binding agreement. Okay, it's widely adopted as the go-to instrument for early stage funding. The valuation is deferred to the priced equity round, so you don't have to argue over the valuation, and it significantly reduces the fundraising timelines and the costs involved. And then it also boosts investor returns because the immediate valuation uptick that you get the discount once you go to the priced equity round. And if you see this illustrative example, and by the way, we can share these slides with people, and we've got a video on the benefits of a Safe Note. But say, for example, an investor invests $50,000 and they're getting a 25% discount. On the assumption that the business is valued at $25 million, that means that you're going to raise $5 million at 20% equity. That's 2.5 million shares at $2. And you can see the priced equity round would be $50,000 at, which is 25,000 shares at $2. But the Safe Note investor will get 33,000 shares at $1.50. So they're getting an automatic uplift right from the start. You can see that as a slide on the left-hand side. And so there's significant benefit to the investors from participating. And equally from the company perspective, it allows us to do the round as part of a much bigger priced equity round, which we're working with Simple Capital on to bring on a significant institutional partner and to truly scale the business.
Scott, I wonder if you could expand on our capital raising timeline. Sorry, can you hear me? Okay.
Yeah,
if you could expand on our capital raising timeline, which also leads into another question that came through tonight as well, which is, in our first Seedrs raise, we achieved nearly 2 million. Why did we only target 750,000 for round 2?
So let me start with the Seedrs one. If you look at the Seedrs target, it was 750 in the first raise. The way that Seedrs work is that you want to make sure that you succeed and hit the raise target quite quickly, and then you want to over raise. It's just the way it works. So in the first raise, our target was 750 and we raised 2 million. In this raise, we're following the same formula. It's 750 with the intention to over raise. Our total raise is 3 million, but we don't necessarily do all of that on platform within Seedrs. We're doing some of it with our Sharia partner. We're doing some of it with our Indian partner, and collaboration will be the full 3 million. If you look here, it sort of ties in quite nicely with the next slide, which is the timing deadline. So we launched the Safe Note and we went out to our current shareholders. As I said to you, we had a 75% follow-on, which is fantastic. We're now launching the Seedrs raise, and the combination, we've already raised $1 million. That's about 750,000 pounds. And the combination is to do a further 2 million between Seedrs and our global community and strategic partners. So that's a total of 3 million. And then the intention is to do the priced equity round with a target of 5 million from around, we'll start in Q2, but looking to close it in Q3, probably Q4 in terms of the timeline. But it just gives people a view on our plan.
Great. What are those funds that we're currently raising for and have raised for going to be used for?
So again, I did refer to this, but what I want to do is just share this slide here, which goes into a bit more detail. So if you look at the profitability initiatives, this is all around the scalable operating profit, and it's about our meta marketplace. And it's about consistently getting your metrics to be better. So your member conversions, your investor conversions, the number of transactions, and that's about our meta marketplace rollout and our venturing, etc. Our technology is all about wealth tech. This is our CapEx. This is actually investing in the consistent and never-ending growth of the UX and the platform, basically the user interface for the UX and the UI. And then 50%, and this is really important because from a scaling perspective, not only do you want to be working on your conversion metrics, not only do you want to be working on your technology, but if you're scaling, it's actually about distribution and throughput of your current platform. And this is about our wealth point sales and marketing, our deal origination, our marketplace rollout with digital products, branding and marketing, the marketplace sales and marketing, the GWG compliance, corporate governance, etc. So it's all about the digital distribution. But the breakdown is in 3 buckets. Again, profitability, technology, and distribution.
So we all know that investors have needs and they need to be empowered to make the best decisions they can. Do you want to take us through the 6 investor needs and explain how we overcome those, or we support an investor through their journey and their needs?
Perfectly. Yeah, I think what's quite important here is that we've helped thousands and thousands of investors now from 71 countries to invest. And I've been doing it for over 20 years. And so we've spotted some patterns over those years. We've helped some of the wealthiest people, institutions, etc., right through to investors investing from $100. And what we realized is the pattern. Now, a lot of people, think that it's just about an investment platform, but it's actually not, because investors have 6 needs. The first is that they have to have belief. If an investor doesn't have belief, it doesn't matter about the rest, they will fail. They often say, if you believe you can, or if you believe you can't, you're right. So belief is critically important. Second is they need the knowledge. This is better known in America. The fancy term is education-based marketing. Third is they need the access and the investment. They need to actually be able to participate. There's no point in reading all the books or doing all the courses without actually taking action. Fourth, they need a system. Now, whether you use our system or anyone else's system, an investor needs a system. They need support and accountability. It's about getting the success. They need success results. We call it wealth or freedom. And then finally, it's not a straight line curve. It's a ever evolving upward spiral. And so there's 6 steps and 6 needs that investors have. And so what we've built is the system to allow this to happen. And the belief and the knowledge comes through the Wealth University. The access and the investment comes through, the Wealth Point platform on the B2B side and the Wealth Migrate platform on the B2C side. And the support and the accountability comes through the Wealth Movement, which is our global community. And as I said to you already, it's an upward spiral that repeats itself over and over again. And it's a value chain for investors. And Lee, I know it's a question, I'm going to go straight to it. Amazon and Jeff Bezos was the one that spoke about the flywheel. And what he basically said was, the more we can drop prices, the more customers come. The more customers come, the more demand we've got, the more we can drop prices. And it's an ever-evolving flywheel within their marketplace. Well, we've got the same flywheel concept. We've got GWG, we've got our B2C concept, and we've got our B2B concept. We've got the community, which is called Wealth Movement. We've got the education, which is Wealth University, and we've got the investment platform, which is Wealth Migrate. Level 1, which again is the belief and the knowledge, where someone comes in through the community and then they go to the Wealth University and they get both the belief and the knowledge. And then ideally they go and they invest on the platform, levels 3 and 4. Sometimes the investors come in through the Wealth Movement and they don't want education, they just want to invest. So they might bypass the Wealth University. But once they've invested, then it's all about levels 5 and 6, the support and accountability, the results, and it's an ever-evolving upward spiral. And this is our flywheel. The more investors the more people we get in and the more members, that we get into the education platform, the more people will build trust, the more investors you'll get. The more investors you'll get, the more capital you'll get, the better quality assets you get. The more quality assets you've got, the more investors you'll get. The more investors you get, the better quality assets you've got. You get the point. And then we can leverage the entire platform, the regulation, the compliance, the due diligence, and the supply through our white label B2B solution. And so this is our flywheel concept. And just in the same way as Jeff Bezos and Amazon did it for the retail marketplace, we believe that there's no reason that it can't happen in a property marketplace, and actually even one step further in an alternative, investment marketplace.
Thanks very much, Scott. I wonder if we could flip to the next question. If you want to tackle, are we open for UK investors yet, or when do we see that happening?
Yeah, so one of our biggest frustrations of Brexit, and I know everyone gets upset with Brexit, but before Brexit, we were compliant in the UK. Post-Brexit, our European regulation was no longer compliant in the UK. We are going as a juristic rep under a massive organization. We've submitted all our paperwork now to the FCA, and we've been told it's 8 to 11 weeks away. Why exactly 8 to 11 weeks? Don't shoot the messenger. But once we get that through the FCA, then we will again be allowed to allow English people, residents in England, to be able to invest. It is very frustrating for us. I apologize on behalf of all the people that voted for Brexit, the frustration that it's created us and all our investors, but we are solving it.
Why do we see so few projects per year when you previously raised over 1 billion in investment? 6 to 10 real estate deals seem small in comparison.
So remember that our target is not to be a flea market. Our target is to have quality curated deals. And as an international investor, you want wealth protection as your number one thing to start off with. And so what we aim to do, our target is to get to 15 qualified curated partners that are diversified across countries, assets, and obviously they're diversified across partners if there's 15 of them. If they're bringing 3 to 4 deals per year, so the average quality partner is doing 2 to 4 deals a year. That means 60 deals a year. That's more than one a week. That is far more than the average investor needs. On our platform right now, we've got 3 deals, one in America, one in Australia, and one quarterly basket. And so what we found, and we've got a structured note coming, what we found, if there's more than 3 or 4 opportunities, then people get lost. Again, we're not wanting to be a flea market. We're wanting to have quality curated deals, but allowing people global diversity over the year.
Do the properties you list also have loans? Is there any chance they foreclose or go bankrupt?
So there's a great question, and I would highly recommend if people want reading this document. Let me just get the document up for you. So this is our Wealth Point documentation. We've equally got the Wealth Migrate documentation, and I know it's on the Seedrs platform, so you can ask for this documentation. But we've got the entire process of how we do due diligence here, how we choose the sponsor, how the investor is protected, etc. All the curation and designation of the sponsors, and the entire due diligence framework. Back to the question, do the deals have leverage? Yes. So generally the properties are leveraged 50 to 60%. What we do as part of our due diligence is not only do we do macroeconomics into the country, the asset class, the city, but then we do a due diligence on our partners. And this is really where it becomes significantly important. And I actually want to bring this up while I talk about it, because what we really try and do is we look for partners that are tenured with 50 years experience and over $1 billion assets under management. Now, sometimes we might have emerging, and you'll see that we let investors know where they're at. But why this is important is that those partners are getting a bank loan from the bank based on their track record, but they're also putting in their own capital. And so every deal, we reduce the risk using that process. Then we also look for, it's basically called an income, what's the exact title? It's 130% cover. So it's called income coverage. And what that's looking for is that the predictable income streams are way more than covering the mortgage. And generally, you're looking anywhere from 130% to 200% cover. So is there a chance that the bank can foreclose on the property? Yes, there's always a chance. Lehman Brothers went bankrupt. There's always a chance of something happening. However, the risk is greatly reduced by the way we set up the deals, the way we structure the deals with the partners on the ground, and the due diligence that's done to remove the risk of foreclosure.
Thanks for that insight, Scott. We have another question which doesn't relate to our raise, but does relate to our sponsors. How do we cover risk of the interest rates being at an all-time low? Surely they are going to rise, and then we are going to sit with the same issue that caused the 2008 crash.
Yeah, look, I think this again comes back to that document. I would recommend reading that document. I don't know how to say this without being arrogant, Lee, but I literally wrote the book, Property Going Global. It was published in 2014. It was endorsed by Clem Sunter, that's one of the top 5 globally recognized strategists. And I built a 4-dimensional model on the back of his scenario planning model. And it's effectively created a framework called GIDS, which is the Global Investment Due Diligence System, which is what we use. And it's a quite a complex structure, but it ultimately comes back to your question, because interest rates are a risk. Okay, rising interest rates are a risk. Equally are tenant defaults. Equally are government interventions like Brexit or American-China, trade wars. And so you need to take all of these things into account. And when we work with our sponsors, we take the way that they've set up the financing structure. We look at whether they've got fixed interest rates or whether they've got floating interest rates. We look at their income coverage ratio, which I've just explained in the previous question. And all of those get taken into account by the investment committee, well, firstly the due diligence team and then the investment committee, to allow the investors to know what the risks are so that they can participate. I will say one last thing to the question that I got asked previously. There's a very large investor in England that we're talking to at the moment. And one of the things that we wanted to bring out for years is even a higher level of our product, which is what we call Wealth Protect. And the idea there was to actually buy assets outright, have no leverage in them. And you just hold them. And I'd be facetious, but it's like you buy Big Ben and you buy the Sydney Opera House, like true trophy assets that are going to stand the test of time. And you only have a few of them. And I was literally talking to this extremely large investor this afternoon about, the possibility of bringing that out. So again, what am I saying? Every deal has risk. Every partner has risk. But then what we do is we try and show the investors the different level of risk so that they can make educated, informed decisions for their investment.
Great. Thanks, Scott. There is a follow-on question. In UK, many banks are refusing to lend due to the all-time high property prices, which is another risk. At the point you wish to sell the property, how are we mitigating that with our sponsors?
So it's really interesting because a bunch of these questions are more in our investment thesis around. So again, I would recommend reading our investment thesis, which we bring out annually. One of the things that's important, I've been helping people. I bought my first London property in 2002. So I've been in the UK property market for 20 years. I was 24 years old and I've got a pretty good understanding of the market. And I've helped hundreds of investors invest into UK property. And what I always find fascinating around the world is that property salesmen will stand up and tell you, London's the best place to invest. London's the best place to invest. And it's always the best place to invest. And it's absolute rubbish because markets go through cycles. America was the worst place to invest in residential property in 2008, and it was the best place to invest in the world in 2012. And if you really want me to go into all the research, I can show it to you. Australia was the best performing market in 2009, according to the G20, and England goes through different cycles. And so not only do countries go through cycles, economies go through cycles, but so do asset classes. So you've got residential, you've got industrial, you've got multifamily, you've got hospitals, you've got tourism, and then you've got different asset classes. You've got property, you've got private equity, you've got structured notes, you've got joint venture, you've got green energy. And so as an investor, if you hyper-focus in on, I presume we're talking about residential property and the bank's not lending to people because residential properties are at an all-time high in the UK. Again, read my book, Property Going Global. I've told you that it's an evergreen book. where to go and get all that research. And I agree with you. We're not buying residential properties in the UK. In fact, we're not even in the residential sector. We're in the top 1%. We're where the institutions invest. And I guarantee you that there's good deals in the UK in the aged care sector. It's taken a hiding through COVID. In the industrial sector, everyone's buying stuff through Amazon, and you need industrial logistics parks to be able to do it. There's multifamily or what they call co-living, where you can buy entire blocks of flats. And again, those are the discount. And the reason being is that that's where institutional investors invest. But to answer this lady or gentleman's question, we avoid what retail investors invest in, because they're always frothy. And how do we avoid 2008 in America? Well, don't invest like middle-class investors.
Awesome. Thanks very much, Scott. That concludes...
I want to just take that point quickly to give a good example, Lee, because property in America, residential property in America in 2008 to 2009 dropped anywhere from 40 to 70%, depending on what what state you're in or city you're in. And yet our medical portfolio, and we didn't have medical buildings then, but we had partners on the ground to this day that had medical buildings, never lost one tenant and never lost any income. So while residential property was dropping in terms of its capital growth value, and again, remember, middle-class investors invest for capital growth, whereas wealthy investors invest for predictable income. The quality, institutional quality real estate assets just had predictable income right through the crash and never lost any value. And on top of that, continue to get their predictable income. It's a mindset. If you want to invest like the 99%, you're going to get the results of the 99%. If you want to invest like the top 1%, then you need to invest like the top 1%, and you're going to get the results of the top 1%. And I'm sorry if I'm going into lecture mode. I would recommend coming to one of our webinars on that.
Thank you very much, Scott. I've gone through the chat box as well as the Q&A box, and we have answered all the questions that were posed tonight. If there are any outstanding questions, could you please pop them into the Q&A box? Otherwise, we invite you to reach out to Alex or myself on the details that we provided in the chat box, or directly on the discussion forum on the Seedrs platform, where we will answer all your questions. So before we say goodnight, I wonder, Scott...
One comment I wanted to say. So, Lee, you've mentioned that Tudor's available on the platform, on the live webinar tonight. I just wanted to really acknowledge him. He's been asking some wonderful questions on the Seedrs platform. And just to show people here, because I think it's really important, is that if you go to the Seedrs platform, and let's just go back to here, and you go down to, sorry, I'm going to go up. You can see that you've got investors and you've got discussions, and you can actually go to the discussions thing. And it's like, what does it mean? The competition, like there's a whole bunch of questions here. And then you can go in, and as I said, Tudor's asked a number of great questions here, and we then go and answer them, or you can ask for the documents. You can see the different documents. So, all the information is here. Come and be part of the conversation, ask the questions. Tonight we've asked, for a live webinar, if anyone's got any questions. And by the way, Lee, I'm happy to stay here for another hour if people want to ask questions, because, our 3 core values in the company are trust, transparency, and alignment. So, we, between you and I and Alex, we're going in here, we're trying to answer the questions. And I'd like to think that when we do answer a question, we try and do it very thoroughly. So as I said to you, and Tudor, I apologize if I'm not pronouncing your name correctly, but Tudor Alexandru, asked a great question here around competition. And, then I try to answer it. Now, I've really tried to answer things, as thoroughly as possible when we have done. In what are we going to invest? We've explained it in a lot of detail. But if it's not, if it still needs more detail, then reach out to us. Again, our 3 core values: trust, transparency, and alignment. Ask us the questions. We want to share. We want to be part of a community-based company where we're all going in the right direction. And one of the things that's very important to me personally, I don't speak for Alex and Lee here, but I want people to go in and make decisions based on their eyes wide open. We've got a great opportunity. Is there risk? Of course there's risk. You're investing in a high growth company. We could go to the moon. We could go to our grave. That's what happens in high growth companies. But I can tell you one thing, we've got very high aspirations, a very high vision of what is possible. And most importantly, I believe we're driven by both profit and purpose to solve one of the greatest challenges on the planet. Through all of that, we've got 20 years worth of passion in the space. and it's going to be hard to answer in an hour and 16 minutes.
I think, as always, your passion does come through, Scott, as does the rest of the team. So thank you for that. There are no other questions that have come through. So I'm going to assume that we have given you enough for you to go away from this webinar and think about and come back to the discussion board on Seedrs or directly to Alex, myself, or Scott to that you might have. Scott, before we close off, any closing comments or thoughts for our attendees?
Yeah, I think just in the comment box, and it's important that you've got the comment box. Again, I'm going to actually share my screen just so that it's easy for people. Sorry, let me get the right slide up. I just need to go back a few slides here. That slide is the one I'm looking for. Oh no, come on, man. Sorry. PowerPoint's gone the wrong way now. This is the slide I'm looking for. Where is it? It's coming. Sorry. This one. Is that, reach out to Alex if you want to deal with one of our internal members, if you want to deal with a third-party person. And Luke, just by the way, Luke used to work at Seedrs. He worked there for a number of years and then got, I don't know if he was headhunted, but he basically moved across to Simple Capital, the venture capital firm. So you can get a third-party review because they've done a full third-party due diligence on us. When you go on Seedrs, not only do you have a thorough due diligence with them, they're FCA regulated. Took us about 3 months, and I mean, we've already done it, which is surprising for us, but it took us 3 months to go through the full due diligence. But Luke and the guys at Simple Capital. But my point being is that Alex is also in the chat box, and for those of you who are live, has put in the his details where you can click through to WhatsApp his number, and I see that both Alex has posted it and Lee has posted it in it, or you can reach out via email. We love to talk to people, so let us know if you want to have a follow up. I think that's important. I also just want to mention, Lee, that next week we're hosting 3 webinars coming up as part of Scaling 5.0. Next week is our B2B focus. So it's how are we going to grow the company through strategic partners. We've got Lyndon Booth, who's our PMO, Product Management Officer, and effectively heads up that from a WealthPoint B2B perspective. We've got our Ish Anand, who's our Indian partner, and we've got Ishmael Malik, that is our Sharia compliant partner. So you'll learn from our B2B solution, you'll learn from our geographies partner, an example of a geography partner, and an example of a genre partner. Then a week later, we've got our B2C. I touched on it tonight with the flywheel concept, but we're going to go into in a lot more detail. What is our distribution and our organic growth strategy within Wealth Migrate and our B2C strategy. And then finally, we're going to culminate with Willem van der Post, our chairman. As I said to you, he used to run the exponential technology unit for Deloitte and has now been running a venture capital firm for the last 4 years. Him and I are going to be coming together to talk about scaling, to talk about wealth and how it's being created in this new decade and what it means to you as an investor. So, hopefully tonight's added value. If it has, please share it with other people. Comment on the Seedrs platform so that they too want to come and join us, and then join us for the next 3 live webinars. And again, if you've got questions, as I said to Tudor Alexandru, on a number of my chats, come to the webinars. Come and ask us any questions you want. We are doing an Ask Anything session, at the, now, and we're here. We'll stay as long as it takes to answer whatever questions people have. So I know that's a very long comment, lead to your question, but I think it's important that people understand how we want to integrate with the shareholders. And when you become a shareholder, you get access to our WhatsApp groups, to our data rooms, to really, we want to engage you in our community. And ideally, you're not a passive investor. You're someone that not only wants to take part and add value yourself, but you also want to get tremendous value out of the global community.
Thank you very much for that, Scott. I really do appreciate that. I am busy posting the link at the moment where you can register for our upcoming webinar next week called Scaling Through Partnerships. As Scott mentioned, we're going to have 3 of our partners online. So as I post that, Alex, Any closing thoughts or something that you would like to share with our attendees?
Thanks, Lee. Well, if anyone has any questions or would like to discuss the opportunity that Scott has shared with you this evening in more detail, you have all my links. Please feel free to reach out. As I mentioned, I am currently on a countrywide tour of South Africa. I currently find myself in Durban, and within the next few weeks, we're going through to Johannesburg and ending in Cape Town. We also have our breakfast events that we will be hosting, where we're inviting anyone that would like to come and learn and understand how to invest offshore. So yeah, please, I welcome anyone to connect with me, and then yeah, let's take that conversation further. Thank you, Scott, for the great presentation this evening. I think you did well.
I think one thing just to add to what Alex has said is that COVID allowing, because we were supposed to be in India in early or late Jan, and then Dubai, and then Mauritius, and then South Africa, and then we were coming to England. So on the assumption COVID allows it to happen, although Boris now says that COVID doesn't exist, we're supposed to be doing our events in England in April as well.
Thank you very much to our attendees who have been with us for the last hour and 22 minutes. We really do appreciate your time and spending this time with us to learn more about the Global Wealth Group, our mission and our purpose. I reiterate once more, please reach out to any of us and on the discussion section on Seedrs to reach us and ask any of your questions, and to join us on our upcoming webinar to meet some of our partners. So I did post that link in the chat box if you want to grab that and to sign up for that webinar. But to Scott and Alex, yes, Scott.
When you finish, Lee, I'll just have one comment to say.
No, go.
I just think, my invitation to people is that the world has some grand challenges, and I believe that in our lifetime we can solve those challenges. And so if tonight's of value to you, please share it with other people. We want to empower 1 billion people, and the only way we can do that is one person at a time. And 1 + 1 becomes 2, and 2 + 2 becomes 4, and 4 + 4 becomes 8, and you get the point, and it's exponential growth. However, how it works is each and every one of us taking the responsibility to share it with others, to help them grow their belief, their knowledge. And whether you invest in our company or invest through our platform or come and learn at the Wealth University, my invitation to you is be part of the world that be part of creating the world that you want to see. And that not only is solving your problems, but it's solving other people's problems. And I leave you with one thought. If you empower 1 billion people, it's only a matter of time to build $1 billion company. Help us add value to the world.
Thanks very much, Scott. So with that, we will close off our webinar. Thank you for joining us. And we look forward to seeing you on our webinar next week when we discuss scaling through partnerships. As always, wherever you are in the world, we trust that you are safe, that you are healthy, and that you are surrounded by your loved ones. Take care, everybody, and see you soon.
Cheers, everyone.